Financing your new beauty business. A deep dive into funding options and financial considerations. Starting a beauty business can be an exciting and rewarding venture, but like any entrepreneurial endeavor, it requires significant capital investment. Whether you're creating skincare products, makeup lines, or hair care solutions, the financial aspect of launching and growing a beauty brand can be one of the most challenging hurdles for new business owners. The beauty industry is highly competitive, and securing the right type of financing is critical for the success of your new brand. In this article, we will explore the various funding options available to beauty brand entrepreneurs, the financial considerations to keep in mind, and the evolution of funding within the beauty industry. By understanding the landscape of financing for beauty businesses, entrepreneurs can make informed decisions about how to secure the capital they need to bring their products to market. 1. The high costs of starting a beauty business. The beauty industry, while lucrative, demands substantial investments in research and development, product manufacturing, marketing, and distribution. New beauty brand owners must also take into account costs such as packaging, branding, legal fees, inventory, and staffing. Depending on the scale of the operation, some beauty businesses may also need to invest in physical storefronts or e-commerce platforms. Here are some of the key expenses beauty brand owners must plan for. Product development. Researching and formulating new beauty products requires investment in raw materials, laboratory testing, and quality control. Developing a unique formula, especially for skincare or cosmetic lines, can be expensive and time-consuming. Manufacturing. Whether you opt for small batch manufacturing or work with large-scale production facilities, the cost of manufacturing is one of the highest expenses for a beauty brand. Manufacturing costs often include production, labor, packaging, and shipping. Marketing and branding. As a beauty brand, the way you market your products is essential for building brand recognition and driving sales. This includes digital marketing campaigns, influencer collaborations, content creation, and public relations efforts. The costs associated with developing a unique brand identity and maintaining an engaging social media presence are significant. Distribution and logistics, shipping products, warehousing inventory, and managing fulfillment channels are all part of the operational costs. For beauty businesses that choose to sell internationally, additional shipping and logistics costs can arise. Legal and regulatory fees. The beauty industry is heavily regulated, particularly when it comes to product safety and labeling. Beauty brands must comply with regulations that govern ingredient lists, claims, and advertising. Legal fees for patenting, trademarking, and licensing can add up quickly. Given these costs, beauty brand owners need to carefully consider their financing options to fund product development, marketing strategies, and operational needs. 2. Traditional financing options. For many entrepreneurs, traditional financing is often the first avenue they explore when starting their beauty business. These financing methods typically involve borrowing capital from financial institutions or personal sources. 2.1 Bank loans. Bank loans are one of the most common forms of financing for businesses. Traditional bank loans can provide entrepreneurs with large sums of capital for startup costs. In order to secure a bank loan, entrepreneurs typically need to demonstrate a strong business plan, good credit, and the ability to repay the loan with interest. Bank loans are advantageous in that they often offer relatively low interest rates compared to other forms of financing. However, obtaining a bank loan can be challenging, especially for new businesses without an established track record or collateral. Banks also have rigorous approval processes and may require personal guarantees, which can put personal assets at risk. 2.2 Small Business Administration, SBA, loans. SBA loans are a popular financing option for small businesses, particularly those that may struggle to secure traditional bank loans. The U.S. Small Business Administration, SBA, offers several loan programs to help entrepreneurs secure funding for their businesses. These loans often have favorable terms, such as lower down payments and longer repayment periods. However, SBA loans also have strict eligibility requirements, including minimum credit scores and proof of the ability to repay the loan. Additionally, the application process can be lengthy and require substantial paperwork. 2.3 Personal savings and family/friends. For many new entrepreneurs, personal savings or loans from friends and family, can provide the initial funding needed to launch a beauty business. This type of funding allows entrepreneurs to avoid taking on debt or giving away equity in their businesses. However, borrowing from personal savings or loved ones carries risks, particularly if the business fails to succeed. Entrepreneurs who seek funding from friends and family should be transparent about the risks involved and make sure to formalize any agreements. 3. Alternative financing options. While traditional financing options remain popular, the rise of alternative funding sources has dramatically changed the landscape for beauty entrepreneurs. Over the past few decades, new avenues for securing capital have emerged, particularly for startups in creative industries like beauty. 3.1 Venture capital, VC. Venture capital, VC, is a common method of funding for startups with high growth potential. VC firms provide large sums of capital in exchange for equity ownership in the company. For beauty brands that demonstrate strong market potential, a well-developed product, and the ability to scale quickly, venture capital can provide the financial backing needed to grow the business. Venture capitalists typically invest in businesses with a high level of innovation or disruptive potential. For example, beauty brands focused on sustainability, inclusivity, or cutting-edge technology, such as AI-based skincare recommendations, are attractive to VC investors. However, securing venture capital funding is highly competitive, and the process can be time-consuming. Furthermore, taking on VC funding means giving up some level of control over the company, as investors may want a say in business decisions. 3.2 Angel investors. Angel investors are individuals who provide capital to startups in exchange for equity or convertible debt. Angel investors can offer more flexible terms compared to venture capital firms and are often more willing to take risks on new or unproven ideas. For beauty brand entrepreneurs, angel investors can provide valuable mentorship and guidance, in addition to financial support. Many angel investors have a background in business or beauty and can provide crucial industry insights. However, like venture capitalists, angel investors typically expect a return on their investment, which means giving up some equity in the company. 3.3 Crowdfunding. Crowdfunding has become an increasingly popular financing option for entrepreneurs in recent years, especially within the beauty industry. Platforms like Kickstarter, Indiegogo, and GoFundMe allow entrepreneurs to raise capital by attracting small investments from a large number of individuals. Crowdfunding can be a particularly attractive option for beauty brands with unique, innovative, or niche products. In addition to raising funds, crowdfunding provides an opportunity to test the market demand for a beauty product before committing to large-scale production. If a beauty brand successfully meets its crowdfunding goal, it can build momentum for a product launch. However, it is important to note that crowdfunding campaigns often require extensive marketing efforts, and success is not guaranteed. Brands must also fulfill product orders and deliver rewards to backers. 3.4 Bootstrapping. Bootstrapping refers to self-financing a business using personal resources and revenues generated from the business itself. Entrepreneurs who bootstrap their beauty brand typically fund the business without relying on external investors or loans. This method allows business owners to maintain full control over their brand and operations. Bootstrapping is a viable option for beauty brand owners who have access to personal savings or can generate revenue quickly through sales. However, it may limit the ability to scale rapidly, as the business's growth is constrained by available resources. Bootstrapped businesses may also face challenges when it comes to marketing and production capabilities. 4. The role of digital and social media in financing beauty brands. The rise of social media and digital platforms has also impacted how beauty businesses secure funding. In addition to crowdfunding campaigns, digital platforms allow beauty brand owners to engage directly with consumers and generate buzz around their products. This can lead to increased sales and potential investment opportunities. Beauty entrepreneurs who use social media effectively can build a loyal customer base before even launching a product. Platforms like Instagram, YouTube, and TikTok provide a space for beauty brands to connect with their audience and generate interest in their products. Influencer partnerships, brand collaborations, and viral content can amplify a beauty brand's presence and attract investors who want to capitalize on the brand's momentum. 5. Financial considerations and managing business growth. Securing funding is only part of the equation when it comes to financing a beauty business. Entrepreneurs must also be mindful of financial management, cash flow, and long-term sustainability. It is essential for beauty brand owners to keep track of operational expenses, inventory costs, marketing budgets, and sales forecasts. Business owners must also be aware of how their financing choices impact ownership, control, and decision-making. Whether securing capital through loans, venture capital, angel investors, or crowdfunding, each financing option comes with its own set of financial obligations and responsibilities. Conclusion: the financing landscape for beauty businesses is diverse, with numerous funding options available for new entrepreneurs. From traditional bank loans and personal savings to venture capital and crowdfunding, each financing avenue offers its own set of advantages and challenges. Understanding the financial aspects of starting and scaling a beauty business is crucial for long-term success. By carefully evaluating funding options and managing business finances, beauty entrepreneurs can secure the capital they need to bring their vision to life while navigating the complexities of the ever-evolving beauty industry. The information provided in this article is to be used as background information. This is not advice.